welcome back to our weekly real estate podcast. We are doing a new topic today. Fortunately, we are being brought in by Elena Bolin. How you doing?
Yeah, good. How are you?
Good. How are things in the mortgage industry?
Things are good. Things are still busy. Rates are still great.
What are rates? Just kind of let people know.
Yeah, they're still in the 2s for all government loans and low 3s for all conventional loans.
So what about refinance? Still in the high 2s, low 3s?
Yeah, if you pull cash out, low 3s, but if you don't pull any cash out, you can still get the high 2s on the conventional product.
So if people need to get a hold of you, what's your number, just to kind of throw it out there?
Yeah, of course, 775-825-1600. We're also on McCarran, and we take walk-ins too. I feel like that's a little rare these days, so we
wear your mask if you do.
Yeah.
We still require a mask, but
Mm-hmm.
come on in and see Elena talk about mortgages. She's one of the best in town, so
Thanks. Yeah.
we appreciate her as a partner. So today we're going to actually talk about a topic that has come up quite a bit with the baby boomers coming. A lot of baby boomers are getting older, and I just had actually an open house up where I live, and I would say of the 20 people that came through each day, 40% were people kind of starting to look at downsizing. It's a big topic of discussion as you get older. You don't want to take care of the place. So today we're going to cover that. Obviously, if everyone's situation is different, so we're going to give you some guidelines, hopefully spur some thought, and then hopefully you can give Elena a call or myself a call. Direct message us, send us a message on our social media, and get in touch for a free consultation.
Yeah, definitely open door policy. Any type of question, we're always here for.
Yeah, because everyone's situation is so different. Some people need a loan, some people don't. So contact us if you have questions at the end. Also, you can feel free to comment during this video. So let's get started.
Okay.
Elena, why do people downsize?
The most common thing that we see is, of course, getting to retirement age, like you talked about. Some people just prefer to downsize simply just like it's described for the size. You don't need all the space anymore. You don't want to spend all your time cleaning. Another big topic for that too is moving from a 2-story to a single story. I know that's super important for a lot of families as the kids move out. And I mean, I'm 40 and I already think about my little bit of stairs in my home. I'm like, oh, maybe this isn't going to last forever.
Hey, watch yourself. We still have another good 30 years. And by then they'll have elevators or something.
So it's an important thing to consider, though, when we're talking about downsizing for sure.
Right. And then other things, moving closer to the grandkids.
Yeah.
We do actually see quite a few clients recently actually want to sell here because it's a hot market and move wherever their kids are to help out with the family. So that's another thing. Did we talk about a change in income? Right.
Yeah, that's something I'm seeing a lot more of right now is, unfortunately with COVID, a lot of people are going down from a 2-income household to a single income household. And it just makes you think about restructuring your life and what's important. Some people have preferred that life where maybe one parent gets to stay home with the kids and they want to be able to keep doing that. So right now, with as much equity as most people have, it's a great time to consider selling, downsizing to a smaller house, get rid of the car payments, and by downsizing your bills as well, it just makes it a lot more affordable and a great choice to consider right now.
But with that comes issues. So we're going to go through kind of the game plan, kind of a 40,000 foot look on what that looks like. And like I said, you just give us a call if you're interested in finding out more information. So first and foremost, in my opinion, then I'll hand it off to Elena, is got to have a game plan.
Yes.
It's a big thing. So a lot of the stuff we talk about in my real estate business, my real estate coach, and I'm guessing your business, is having the right mindset.
Yes.
Because if you live somewhere there for 40, 50 years, 30 years, making that move from where you've been comfortable to moving somewhere different and getting a new environment. So you have to be mentally ready for that. Do you have any comments on that?
Yeah, I'm a big believer in the right mindset for things like that, because until you're there, with your heart and your mind, it's just too difficult to swallow that pill of, relocating, even if it's close, right? So I see a lot of our neighborhoods with property right now, like Virginia Foothills, Washoe Valley. A lot of families are, as they come to retirement, wanting maybe move to tract homes, and just losing their property per se in acreage is tough to swallow, and it just takes time. So I think, just like you said, the best plan is to plan. You have to get there.
Yep, you have to be able to get there mentally. And then once you're there, we talk about a lot on this podcast is you got to talk to your team. And what I mean by your team is got to have a good lender, got to have a good realtor, lawyer, accountant is another big one, talking about the tax consequences, especially now in this environment when there appears to be some changes in the tax laws coming up. Right. Make sure you do due diligence. Make sure you have an attorney, have a trust in place, and then ultimately talk to your family. Right. Those are your teammates. And this is a whole thing where you got to go through all the scenarios and try and figure out from a 40,000 foot view, does it make sense for me to move?
Right.
The next thing is, I like to say, do the smell test. And what that involves, in my opinion, is looking at your finances. And a financial advisor is another one on that list that I didn't talk about. So, and maybe pull some comps. So you can call myself or your realtor or your real estate professional and look at what your house is worth. And then look in what you want to downsize to and make sure it makes sense based on what the value of your home is, and can you transfer funds and get into that. And that kind of gets into the fact that you want to talk to a lender if you need to. Some people are fortunate enough where they're going to have enough equity once they sell their house to pay cash. Some people are going to have enough in the bank to buy a new home and then sell theirs. So there's different scenarios, but look at it and make sure it makes financial sense.
Right.
Anything on that?
Yeah, a big thing to know and be aware of, especially for us here in Nevada, is that, resale homes, and especially Washoe County here, we operate on depreciation for the property tax. So something super important to look at is if you're moving from an older home to a newer home, even if it's smaller, the property tax bill can kind of offset the benefit.
Home run. That's why we have Elena on. That's a very good discussion about taxes. So it's depreciating over time. So I'm not kidding. So if you look at Plumas, you can find $2 to $3 million homes that are 100 years old where the property taxes are under $1,000 a year. Now, if you go buy a new one and talk to your accountant, but I believe it's 1.25%. So if you're buying $1 million home, you can expect the first year to pay $12,500. So don't make that mistake. Is if you're moving from an old home where taxes are $1,500 and you're moving up, $10,000 is a huge jump. And then we also talk to an accountant, and there's SALT taxes where you can only write off a certain amount of the taxes. So make sure that you have everyone in place and talking about all these issues. And that was a great point. So thanks for bringing that up. Now, do you know anybody that can talk about the details, and maybe we can have them on a podcast, what depreciating, everyone talks about the tax structure, but it's the most convoluted tax thing. So maybe if we can talk offline and have someone in on the podcast talking about how the tax actually works.
Yes, I'd love that. I think that would help a lot of people.
And keep in mind that we're actually, there's a push by the politicians to change that.
Yeah.
And it could be a big change in the market if it resets every time that you sell. And that's how California is. Every time you sell, it resets to 1.25 what the sell price is. That's not the case here.
Right. It's a big benefit of moving to Nevada.
It is a huge benefit, but there is a push to get that changed.
Right.
So keep that in mind. Great point.
Yes.
So once you talk to everyone and it makes financial sense and you're mentally ready to do it, that's when you need to hire a real estate professional.
Right.
The first things is navigating the process. So there's several things that in different scenarios, the first scenario is it'd be a regular sale. And a regular sale means that you put your house on the market, you sell, and you have some options like you can move in with your kids or temporarily, or if you're moving out of the area, then that's great. You can sell your home, sell it regularly, and get out of it and move on. Now, it becomes a little bit more complicated when you need the equity from your home that some people live there for 30 years, so I'm guessing you own it free and clear.
Right.
And then what happens is you're going to put this beautiful home on it because you're going to use me as your realtor, and we're going to get it all ready to go, and it's going to sell in a week. And then people are like, well, that's where deer in the headlights. What do I do?
Right.
And we just had one where another agent had these people, when we put an offer on their home, but then they got deer in the headlights. Well, we can't find a house because we looked all weekend, got beat out. Because if you're in a situation where you're a contingent sale and you go in and put offers on a house, what are the chances, Elena, of your offer being accepted right now with a contingent sale?
Zero.
Yeah, so the problem is that you have all this equity in this home that you've owned for 30 years, $1 million, and you have to get it out to buy. And the problem you run into is it's contingent upon you selling that. And right now I can tell you almost on any kind of offer, there's at least, and if it's a decent house, multiple offers.
Correct.
And you're going to beat out every time.
Right.
So how do we get past that? So what are some of the ways they can get past that?
You can have a better shot at getting your offer accepted if you have already listed your house for sale and you have an accepted offer on it.
Okay.
And that makes other sellers feel much more comfortable with accepting you as their buyer, knowing that you are in escrow on your sale. I think that's a huge key for most people to understand. And just like you mentioned, it does feel a little bit scary.
It does scare you.
It takes a lot of trust in your team.
Yep. So that's a good point. But in that, when you sign a contract, and it's not something you'll probably see on the MLS, but if you do that with us, which we that's one of the probably the last case if you have to do that, but we do it, is there's a clause in there, and it's basically saying it's contingent upon you successfully completing the purchase of your replacement home. And
Right.
what that looks like is what we've done before is that basically you get into contract with somebody and they give you 30 days. And the contract says, I'm going to give you 30 days to find a home. And if you find a home in that particular time, then the clock starts on inspections, appraisals, and all that once I find my replacement home. And then we do a simultaneous close.
Right.
But you have to have the correct wording in there to protect yourself.
Right.
Because if you get to the end, it doesn't close, you don't want to be in a spot where you don't have anywhere to move.
Right, which is why having an experienced real estate professional is key to something like this.
Yeah, and it has to be very upfront with the other agent. And the biggest thing is you need another agent on the other side that understands the process. Because you're dealing with them and you're dealing with someone that you're buying the home with.
Right.
So both parties need to understand that.
Yeah,
So,
and I think part of the relationships that you've built in the real estate community here just kind of make it easier for you as a professional to bring the whole team on the other side of the transaction together
Right.
as well and make you understand what you're
yeah,
wanting to
everyone
accomplish.
has to be on, and then you have to really sell it to the person that you're buying the home
Right,
from.
right,
That you're-
absolutely.
but that's a good way. You're in contract, and then you can say, "Hey, I'm a cash buyer, and I'm going to close in 30 days." So that really increases your chances
Yes.
of that. But
Yep.
there's some other ways. Do you have a second home? Some people have second homes in a different state, or you have a rental home they can move into temporarily.
Right.
So, your best position is to be a cash buyer, obviously. So sell your home, live somewhere temporarily,
Right.
if you have kids, right?
Right.
And I know,
That's
so yeah, we're giggling about that. Yeah, move in with your kids. Good luck with that, right? And they have grandkids. But
Right.
I know that my mom did that. They actually sold their house because they wanted time to find it. So she sold her house, got cat, and then now she's in a cash position. But it can be up to 3 to 6 months.
Right. Yes.
And don't think for a second if you're downsizing, anything under $1 million is selling like a hotcake. And I can tell you, I have clients right now in the $2 to $5 million range. It's almost impossible to find a home.
That's insane to hear. But,
Or we get beat out. We
but
get beat out pretty
reality.
regularly on offers, and even though these people are cash. So keep that in mind.
Yeah.
That if you go that route, you need probably a 3 to 6 month window. So make sure you have good relationships with your kids before you go down that route.
Right.
Now the other one is, I see, and we'll get into some lending options here, is you can make it a rental. Sometimes it makes sense, depending on your situation, is
Sure.
maybe take some money out, but make it a rental and then move into another house. And that way you have an income stream. But it has to make sense.
Right.
And make sure you talk to your accountant on that. Another thing is there are some apartment complexes in town that are specializing in exactly what this is they have a 3 to 9 month lease.
Right.
So the big thing is you got to sell, and then you go live in an apartment until you find your home. Again, that puts you in the strongest position possible. The contingent offer is kind of like the last option, but we can't do that.
Right.
Now, what about some other options when it comes down to the mortgage side? I have here, what about taking a home line equity loan out? What does that look like if someone wants to do that?
So a lot of people do wonder, is it okay for me to borrow from somewhere else to help purchase another home? And it is, but it depends on the loan type. So the specific one that is most common and absolutely acceptable is a home equity line of credit. And you hear it abbreviated a lot of times as a HELOC. That is okay. It's okay to use funds that are secured against something, and a HELOC is secured against your home or your property. And you can get HELOCs on primary residence, you can get them on second homes, you can get them on rental properties. There's different restrictions for each residence type, but it's definitely something that will help you get into a downsize home situation if that's.
And then when you sell, that's paid off, correct?
Yeah, you can pay it off. You can 50-50. Some people keep it open in the case that they want to use it for upgrades or, you know, make some modifications to the
But
home.
you get that on your existing home. Take that money, then you're non-contingent, you go and buy a home, and then you sell yours, correct?
Yes.
Okay, now, with all these, there's risks, right? If the market crashes and you're in the process, you got to really be comfortable with what your value of your home is.
Right. That's a good point. There are fixed second mortgages you can do, or the HELOCs are adjustables. That's why it's important to talk to a mortgage professional and go through all the risks and, you know, the long-term plan for what that loan might look like.
Now, talk about bridge loan. What is a bridge loan, and how does it apply to someone that's thinking about doing a downsize?
A bridge loan, it's just like it sounds. It's a temporary thing. It's just to help get you from point A to point B. It does come with a little bit of a higher interest rate because all lenders and banks know that it's a temporary situation. It's a Band-Aid to, you know, the house A to house B, but they can lend you the money knowing that they're going to get paid off when that sale closes.
So what are we talking in interest rate difference?
It's usually 1% higher than the
Wow, so you're
current
talking
market.
4.25-ish?
Right. Say worst case for now.
And what size loan can they take out? What is a bridge loan? How much? What is that amount?
They're not available for jumbo loans. So jumbo loans in Washoe County are conventional loans are capped at $548,250 in Washoe County.
And the median home price is $530,000.
Right.
So that's not really a jumbo anymore.
Yes. So it is pretty common to see people, you know, pull out the maximum amount that they can, all the way, you know, up to the $548,000, depending on what your home value might be. But you just have to remember it's temporary and it's a strategy. You don't have to go that route, but it's available, and that's why you want to, again, get a whole team together to talk about the best option for you.
And this is a discussion that you would sit down at the table and talk to your realtor, your lender. You know, I would even talk to your financial advisor.
Yes.
I got to stress that and make sure you have your team together. Yeah. Now, what is a recasting of a loan? Because that's one of the things that come up a lot. And what is it, and how does it benefit someone that's thinking about doing a downsize?
A lot of times when you can't afford both mortgages, so let's say you have a mortgage on your current existing home and you want to downsize and move into a smaller home, and you've got a down payment available, and you can go ahead and move into that smaller home, and then you sell the departing residence.
Yep.
You can take all of the proceeds from that sale and recast your new home loan, so it just reduces the amount that you initially had to borrow.
It doesn't change your payment. Right?
The recast does, yes.
It does. Okay.
It's like my favorite thing to tell people because it's just a really neat feature that hasn't existed for that long. For us, it's been a little over a year. And it's just anytime you pay down $5,000 or more on your current conventional home loan, you go through the recast process. It does take about 60 days.
What is the cost?
$150.
Wow. And how many times can you do it?
There's no limit.
So you can keep putting money. I mean, it's not probably a good strategy, but does your interest rate change?
No.
But it's just recalculating your loan based on the reduction in your principal.
Yeah, because you can always just, you know, make a giant payment to the principal of your home loan. Anyone can always do that.
Yep.
But if you want to commit yourself and your family to that permanently changed home loan based on applying that big chunk of funds down to your home mortgage, it is a good discipline tool, and I definitely do recommend it for $150. It's a great investment, and you don't have to refinance, which is really nice too.
Well, there's a lot of cost to refinance, right?
Right, absolutely.
So $150 is, and it takes about 6 months.
3 months.
Now, can you do it right away, or is there a certain period of time you have to wait once you get a mortgage? You have to wait a certain period of time, or
I tell everybody make sure you get your first payment made. There's technically no rule on how fast you can do it, but it's good to get that first payment made because a lot of home loans get sold on the secondary market, meaning servicing can change. You know, there's the big banks that go in and gobble up the bond purchasing, and it can be Bank of America, Chase, Wells Fargo, etc. So it's just something to watch out for and make sure make that first payment, watch your mail, watch your paperwork, and then you can look at making that
This
recast
is why we
option.
have Elena on. All these are great points. So great points. Anything else on navigating the downsizing? I mean, obviously the first pecking order would be, let's just kind of review quickly,
Yep.
give some people some ideas, and then obviously you're gonna have to give us a call because it's very specialized on whatever your situation
Right.
is, based on how much you're getting from retirement, 401ks, and all that. So
Right.
the first option would be resale. Do a normal resale. We get in, sell your house, and you can afford that, and you can live somewhere in the meantime, or if you're moving out of the area. So cash is king. So if you can do that, great. If you can't, you can sell your house, move in with some kids, which is kind of crazy, but if you have family members or some people have next-gen homes, if there's a place that you can temporarily relocate, now keep in mind that's kind of a hassle because you have all your belongings, got to go in storage. So,
Right.
And then the last option, which is still a viable option, is to do a reverse contingent sale. And we actually have a video, and I'll put it up here. It's about the reverse. When you're buying and moving up, downsize is the reverse. I'm going to find my home before I close on this house. I got to close on the other house. And there's a little window where it's going to be a little bit overlap, but it's in there, the language. Make sure you have the proper language in there. And they give you an opportunity to find a replacement house first, then you sell yours, and then you move on.
Right.
And then you can talk to Elena. Always give her a call in the office. What's your number one last time?
775-825-1600.
Okay. So if you have any other questions, even if you're just thinking about refinance or any other mortgage, call Elena. She's one of the best in town. So
Thank you.
Again, our podcasts have been wildly successful, and the reason why is we have great viewers. A lot of people just taking a look at us, but we're also providing a lot of great information.
Yes.
So if you are someone in the real estate industry that wants to promote your business and talk about a specific aspect, give us a call. We'd love to have you on. If you can't find me on social media, there's something wrong with you.
It's good.
So until next time, you guys have a great one, and look forward to hearing from you guys soon.
Right.